Welcome, ladies and gentlemen, back to Bitcoin Daily. Today, we are doing a video on a question we get all the time. They're always like, Jay, how much money do I need to make $100 a day? How much? Everybody wants to know, right? So we went ahead and tried to break it down in the simplest form possible and show you how you must use risk management tools and rules in order to get to that number, all right, properly without blowing your account. Okay, so let me get my face out the way and let's jump right into this. So how much money do you need to make $100 a day trading? So the first thing is, we're reverse engineering using risk management rules, right? So the first thing on risk management, that the most important thing, one of the most important rules for us is basically position size, right? So for position sizing, we have what's called the 5% rule. Never risk more than 5% on any one trade. But that's the max. That's the high end of it. So that's the riskier, the high risk end of it, right? So ideally, you want to be in the 1% to 2% range per trade. So anytime you're in a trade, the most you want to ever risk in one trade is 1% to 2%. All right, 5% is the rule, and it is a max. But ideally, the majority of your trades should be made within the 1% to 2%. Um, if you're very confident about a trade, 3% is cool and it's fine to have that. But getting into 4 to 5%, that should be less than probably 5% of your trades. Should be in the 4 to 5% risk range. All right. So now that we know our position size and our 5% rule, now what's next? Risk reward, right? So the minimum risk reward on any trade should be 2 to 1 or 1 to 2, however you want to say it. So if your reward is $100 in a winning trade, your risk should never ever be a max, of $50, right? So your risk should never ever be more than $50. When using this risk reward rule, you only need to be right 33% of the time to be a break-even trader. Alright guys, if you follow this risk reward rule, you only need to be right a third of the time and you're still a break-even trader. So if you're right more than 33% of the time, guess what? You're now a profitable trader. So if you're right 50% of the time using this method on 100 total trades, you will profit $2,500 per 100 trades if your reward is $100 and your risk is $50. That's just to give you an example. And to break this down even further, all right, a 1 to 2 risk reward, right? So our risk is $50, our reward is $100. So if we're losing, and on a losing trade, what we're risking is $50. On a winning trade, what we're winning is $100. So per 100 trades are gonna be, just to make everything simple, every example here is gonna be per 100 trades. All right. So if you have a 33% success rate, you're a break-even trader. If you have a 50% success rate, you're now talking about you're making $2,500 profit per 100 trades. If you have 55% success rate, you're making $3,250 profit per 100 trades. If you have a 60% success rate, now you're talking about $4,000 profit per 100 trades, guys. So in our trading rooms, for example, we averaged in 2019 around 70% success rate, and we're around the same numbers this year. We're at around 70% success rate. So at a 70% success rate, I didn't do it here, but yeah, you're making a shit ton of money per 100 trades, and you're very, very profitable at that point. So what is our average take profit per trade, right? So when we're breaking this down, we have to figure out where we're taking profit and what our average is, right? So that just because we need to know a number so that we can figure out everything else. If we don't know these numbers, if we don't know our numbers, then we can't figure these things out. So on average, when I'm taking my trades in the thousands of trades I've taken over the years that I've been trading, on average, I'm usually taking profits around 25% to 50%, right? So this is just from my personal experience. You can change these numbers, depending on how you trade, what your average is. But on my personal experience, I'm usually taking profits between 25 to 50% on average. Now, everything's situational in trading. You must remember that. A lot of times I'm either cutting trades if I no longer like them, or if once it's in profit, I'll set the stop loss or the trail stop up to break even. So I'll do a lot of things to make sure that I'm not taking losing trades, right? But let's just say on average 25 to 50%. So let's just say the middle of that, right? The middle of 25 to 50 is going to be 40%. So 40% in this example, and just to get these numbers right, will be our target per trade. Okay, so 40% is a magic number we're looking for. And because we're using our risk reward of 2 to 1 or 1 to 2, we're risking $1 to make $2, right? So if our profit target is 40% on a winning trade, then on a losing trade, we will be at 20%. It will be our stop loss. So 20% loss will be our stop loss per trade. So if we're in a trade and we're at 20%, right, loss, we're down 20%, we're cutting that trade. And if when we hit 40%, we're taking profits. So just to be black and white, remember, trading is not black and white, but just for this example and for the purposes of this tutorial, I'm going to try to make it as simple as possible and as black and white as possible, just for the purposes of this, okay? So if 40% is our average target, how much are we risking for that, so that 40% equals $100 profit? So I did the math here, and $250 times 40% equals $100. So if our position size equals $250 and we make 40% profit on those $250, we just earned $100 profit on that one trade, right? So now remember, we're reverse engineering this. So the 5% rule, if 5% is $250, that means 5,000 times 5% equals 250. So now we understand, by going over through all these rules and reverse engineering this, that the minimum capital we need to have in order to hit that $100 per trade is $5,000. We have come to this by reverse engineering it, right? And we're reverse engineering it from a risk management standpoint, because we want to always be practicing proper risk management. So 5,000 times 5% is 250. Now remember, $5,000 capital is needed, but this is risking the top end of this 5%. So this is very, very high risk. What happens with this, it makes your account very, very volatile. So when you're winning, your account will be moving real quick, and when you're losing, it's also moving real quick in the opposite direction. So remember, this is high risk. So now if we want to be a little bit more conservative, we still want to be kind of risky, but we're still trying to be conservative. How much money do we need in order to keep hitting these numbers, right? So 8,334 capital is what would be needed as in a medium risk. So that would be risking 3% of your capital per trade. So now this is a little bit of a safer option, $8,334. It is $3,334 more than this one, but now we have a lot more room and we're playing it a lot safer. So now our risk of blowing our accounts drops immensely, right? And then of course, if you want to be very, very safe, then $10,000 capital is what's needed. It will be the safest risk. And in this example, then you're only risking 1% of your account per trade to make that $100. So you're risking 1% of your capital, um, and you'll be able to hit this number. Um, so that's pretty much it, guys. Hold on. So now I'm looking at this number and I'm saying you're risking 1% and it's not making sense to me. Did I do the math wrong on this, guys? 10,000. Yeah, I did the math wrong on this, guys. I knew it. I just looked at this and I was like, wait, that doesn't make sense. So I think the actual number here. So I'm trying to get the 1% number. I believe it's 20, 25. Yeah, so okay. So this changes things a lot. So I made an error here, guys. Apologize about that. So for the safest, right? Safest risk where you're only risking 1% per trade, $25,000 is actually what's needed here. Not 10,000. 25,000. And for, because now I'm thinking, okay, so the 8,000 is correct. It was just the safest option here. So, all right, so the $5,000 capital is needed if you're willing to risk 5% per trade. This is not recommended, but if you only have $5,000 to start with, then you got to start with what you got. So, and also you don't have to aim for $100 per day. Remember that, guys. Now the next safest option is 8,334. That's the capital that will be needed if you're only risking 3%, right? So 3% of this equals 250. 250 times 40% equals $100 on a winning trade. Now the last one is the one that I made a mistake on. Whoops, I just knocked down my phone. This is actually $25,000 capital is needed. It's the safest risk where you're only risking at this point 1% of your capital, which is 250 times 40% on a winning trade equals $100, right? So that's pretty much it as far as that goes, guys. I want to finish this by telling you guys, you don't have to, like, I'm trying to see how I can put this. It's not easy to make $100 every single day, right? With trading is a roller coaster. So it's, let me see, let me start over here. So trading, you're basically going like this. You're going up and down. It's not a straight path up. So you're not just gonna be doing $100 every single day. 100, like that's it's crazy to think that if you make $100 a day, right, and you're trading, let's say you're trading 5 days a week. In this example, let's say you're in the stock market trading 5 days a week, making $100 a day. So that's 100 times 20. You're talking about $2,000. You're making, if you have $5,000, you're making you're almost making 50%. You're talking about 40% profit on your entire account, and that's very difficult to do in a 30-day period. That doesn't happen like that, right? You have to go on a it's possible, but you have to go on a string. You have to go on a string of winners in order to get there. You're not gonna win every single day. There's gonna be losing days. There's gonna be losing weeks. So my advice is to start on a weekly and monthly. Set weekly and monthly goals of a percentage on your portfolio. And build on that. That's more realistic. Making making $100 every single day is not realistic. It's not. You're not gonna win every single day. One day you'll win $100. One day you're gonna lose $100. One day you're gonna lose $200. One day you're gonna win $300. Like it's gonna be just so up and down that it's not realistic to just be okay $100 a day. You can definitely aim for it, but remember, don't over trade just to try to get to those $100 every single day. Is basically what I'm trying to say. Um, think of it more in a weekly standpoint. Like so in a week, you want to make $500 that week, right? So you're gonna be aiming for that week. Now now you're not trying to overtrade as much every single day to try to get to $100. Now you're being a little bit more choosier with your trades, because on that one day you don't have to make $100. You still have all week. And if you go to a monthly standpoint, all right, let's try to make $2,000 a month. Then you put out, if you only have $5,000, you're trying to make $2,000 a month. You're putting a lot of risk on yourself. You know what I mean? That's a lot of pressure. You're gonna take trades that you're not supposed to be trading. So what I'm trying to say, basically, just slowly build it up, guys. Be patient. It is a grind. Until you're over $25,000, it is a grind to be hitting these numbers consistently, without putting so much pressure on yourself and without over trading. All right. So yeah. So that's basically it, guys. I just wanted to get this out there. Hopefully this helps you guys. Hopefully it gives you a clearer vision on what you need in order to start building up that portfolio. So for the question of the day, we're gonna do today's question of the day is going to be, once it pops up, as you guys know, the question of the day, every video we will have a random question about something in the video. Question will always be in a random area of the video. Find a question, then find the answer. Post your answer in the comments for a chance to win a free month membership to our trading room. Winners will be picked randomly once a video receives over 30 likes. So today's question of the day, let's do it about something here. Okay, what is the 5% rule? Alright, that is a question of the day. What is the 5% rule, guys? Alright, that's basically it, guys. I hope you guys enjoyed this. I'll catch you on the next one. Peace and love.